Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello traders, checking in on the broader markets. We're certainly going to talk about oil. It's been a very overwhelming day, and it's a day for history. You're going to remember today, and people are going to be talking about today in the future as the day that oil went to zero. So the current futures contract for oil that is going to expire tomorrow dumped in a big way. The May contract. All the volume right now is already onto the June contract. If you want to be watching oil, in my opinion, what you should be watching is CLM 2020. That is in the $21 range. That's where the volume has gone in the futures contract. So what we're seeing right now, and before I get into it, just want to make a very broad statement that I said today to our members. If you do not fully understand what is going on in oil, contango, futures contracts rolling over, how USO is calculated, if you are not very confident in all of that understanding, you should not be trading oil, period. Very simple statement. Why are you going to put your hard-earned money at risk on something that you do not understand? It makes no sense. But you're looking on social media and you're seeing people rushing to throw their money at oil without understanding what's going on. It baffles my mind, but that's what happens, and that's what is currently happening. Don't feel bad if you don't fully understand what's going on. I have been trading stocks for 9 years. I have been trading commodities for maybe 6 years. I am not a futures trader. I don't actively trade commodities often, but it's one of my little tools in my tool belt that I'll go to in certain situations. I'm not going to trade oil right now because after my 4 hours of weekend homework, I still do not fully understand what's going on, and I'm hearing from people talking to financial advisors and talking to people in the game that have no idea what's going on. This is very unusual activity, and if something is very unusual and unpredictable, hands off. I put my money at risk when I have very clearly defined risk to reward scenarios and confidence. If I do not have those situations, I do not put my money at risk, and neither should you. Another thing, if you are trading oil and you are a bit confident and you're swing trading and looking longer term, in my opinion, the only way you should be doing that is through futures. I do not trust USO. I do not trust USO as an ETF. We saw XIV, the ETF, break and explode. People have been putting out warnings against the dangers of ETFs and the amount of dollar volume at risk or exposed in ETFs for a long time. ETFs can break. We get scenarios where there's insane volatility or price conditions that we've never anticipated or never seen, and ETFs can break. I'm not going to say USO is going to break, but I don't trust it enough to put my hard-earned money in it overnight, especially because your hands are tied. USO is going to stop trading at 8 p.m. Eastern, and oil futures are going to trade all through the night, and your stop losses can be skipped. So the futures contract to be watching right now, in my opinion, is CLM 2020, the June contract, where that's where the volume is right now. It's trading at $21. The May contract dumped today and went to zero or went to negative because the cost to store oil is higher than the value that it's currently at. What it's telling us is nobody wants oil right now, but oil has value for June into the future. So trading futures, if you're trading oil, in my opinion, and avoiding the ETF of USO. We also saw $1 billion inflow in USO last week or very recently, and there's a lot of longs that are at a loss right now and may have to liquidate. There's an article that came out on Forbes, and I will link it in the description or in the comments of YouTube here, that is essentially saying the ETF USO is the culprit behind oil massive plunge. They're saying that the USO ETF had 25% of May's future contracts, and as they're rolling over, May's contract's going to roll over tomorrow at the close, and as they're rolling that over into June, they are dumping those May contracts, which is dumping the price on those May contracts. So check out this article, worth reading. Again, you can go down so many rabbit holes in this current situation on Twitter, and there's a Twitter handle CHIGRL. I'll post that as well. Just want to double check that that's her. But her Twitter has been very useful, and she's great at answering questions, and it's worth paying attention to. So again, use this as a learning experience. Absolutely. Don't put your money at risk. Very simple. In my opinion, that's what we should be doing. So one thing that's very clear, oil is bearish. The trend is bearish. On any bounces, we're looking for lower highs. Anything on the June futures contract under 23.24 is an hourly lower high. Anything on the 4-hour chart under 26.78 is a 4-hour lower high. When we change those trends, we will be looking for a daily lower high compared to 33.15. It's going to take a lot of work for these bulls to change these trends. And right now, the way to be trading oil, if you want to be trading this play, in my opinion, is the oil tankers. And they are new to me. I have never been interested in oil tankers in the past. And the ones to be watching, some right off the top of my head, just scrolling to the list real quick. One of them is NAT. Another one, TK. So we got TK, NAT, NNA, FRO. They're all very low cap names, but let's just go through them real quick. NAT, close at the high of the day, key $5 resistance. TK, close near the high of the day, breaking out on the daily time frame. So why are they breaking out? Because we're running out of storage space. And these storages are being utilized. Bull break on a lot of these low cap names. So moving on from oil, don't trade oil unless you are extremely confident understanding what's going on. If you are not, this is the time to learn, not to throw money around. SPY. So SPY today, we started with market weakness pre-market. The open was, I considered it a double bottom with the low of Friday. The low of Friday was 282.40, and the low of today at that point was 282.23 or something. We started the morning a few pennies under that level, but we very quickly started a bounce, and the 5-minute uptrend kicked in, and the bulls had control through the morning. From there, we knew just to be looking for an hourly lower high, because anything under 288 was an hourly lower high, and we would have had to have seen over a 2% bounce to just break that resistance. And as soon as we lost that momentum with a clear 15-minute lower high and lower low, the bears took over, and it started to become apparent oil was spiking fear in the market. I am short SPY right now overnight. I have not been short SPY overnight since February 21st is the last time I was in a short swing position. I am back in one now. Number one, to offset a SPY no-touch position that I have from entering on the way down with a 240s average. And number two, because it makes sense to me, this was a fundamental trade, which I never do, but we're going to be hearing about oil for the next 12, 15 hours until tomorrow morning. And in my opinion, that's going to spike some jitters in the retail traders that don't really understand what's going on, and retail investors. So I was fine with that exposure being bearish into overnight because of the volume that started coming in into the end of the day. I would have preferred if we broke the low pre-market before the close, but we're breaking it here after hours. Better late than never. And big picture, I'm watching the SPX 500 USD futures chart in the 12-hour uptrend. We are in a 12-hour uptrend. We have 12-period exponential support, which held the last higher low. Anything above 2753 is a 12-hour higher low. And we have to lose this 12-hour uptrend before we even talk about a weekly lower high being set. If we're in a 12-hour uptrend on this chart, can't say with any conviction that a weekly lower high is being set. That being said, this oil fear and uncertainty and lack of understanding by the general public is the reason that I am short and the potential catalyst for a weekly lower high to be set. Pretty much I'm going to have to see Netflix bearish reaction to earnings and other tech sector earnings start to come in bearish in addition to this oil fear if we're going to see these weekly lower highs set. And that's entirely possible. If the bulls regain the hourly trend, I will exit my bearish position in SPY. And right now on SPY, anything under 286.29 is just an hourly lower high. So the hourly downtrend is the guide on that position. IWM, daily lower high is set at 122.90 And if we drop down and break 114.56, we are then in a very clear downtrend on the daily chart. And a very clear weekly lower high will have been set. So the line in the sand level, 114.56, is the most important support on IWM. For QQQ, we closed at the low of the day, but we're still in a pattern of a higher low every day for the last week. Bears need to see a break of 212.57 and 212.08. Still easily in a daily uptrend, even if those levels break. But it will be a shift in momentum away from the very strong bulls that controlled all last week. And again, potential profit taking into Netflix earnings. If Netflix earnings are plus or minus or less than a 5% reaction, plus or minus, whatever direction, I don't think it's going to have a significant impact on the sector. If it's more than 5%, if it's 8%, 10%, we're going to see a lot of correlation. You know, if Netflix goes down 10% on earnings, we're going to look at Apple and Google and Amazon all dropping 4 or 5% in my opinion. If it's up 10%, likewise in the other direction. So Netflix will be key, but if it's less than 5%, it's going to be a fairly non-reaction to the sector as a whole, in my opinion. Financial sector, daily lower high is set at 22.52, and if we drop down and break 21.06, we are then in a daily downtrend, and our weekly lower high will very clearly be set. Line in the sand level, 21.06. Healthcare held on strong to start the day, but we did double top 101.13, 101.41 if we see a bear break of 99.71 and 99.39. Same as QQQ, daily consolidation will be underway, tons of space for a daily higher low to form, but a shift in momentum away from the very strong short-term bulls that controlled the entirety of last week. Biotech sector was on fire today. Increasing bull volume, full-on breakout. They were the strongest sector on Friday and the strongest sector today, at least on my screen. I'm not watching every single sector. Closed near the highs 4 out of the last 5 days. And really 5, 6, 7 out of the last 8 days. So the bulls are extremely strong. The hourly uptrend is intact. We're looking for an hourly higher low to try and form. Anything above the low of today will be an hourly higher low. Resistance is 96.83. And then we're looking up to 98.76. Big time V-shaped recovery. Here we are at levels pre-corona dump. SMH. Daily higher low, line in the sand level for me is 125.99. We are watching the 4-hour rising wedge setup, which is starting to see a bit of weakness. Could put a support line there. If I wanted to draw it tighter, I would use the closer anchor point, and I would put it there and say, we broke bearish today. Either way, we're watching the daily uptrend, which is in play with this pullback today. We have AMD topping at the all-time high with a double top in extended hours, keeping an eye out for the semiconductor bulls to lose short-term momentum. All about the daily uptrend. If it's lost, our weekly lower high will be set. TLT, daily inside bar. If it breaks bearish, we have not yet set a daily higher low compared to 163.48. If it breaks bullish, we have at 167.27. So bulls keeping control still, even though we broke 170.33 without any notable follow through. The consolidation at this point from that rejection or bull break without any follow through is still fairly healthy. Gold. Gold's looking for a daily higher low. I have a swing GLD position that I will exit when the gold daily uptrend is lost. 4-hour trend needs to change for the bulls overnight into tomorrow with a clear higher low and higher high to set that daily higher low. And then we'll be looking right back to the high of 17.48. Silver, daily inside bar. If it breaks bullish, our daily higher low is set at 15.02. If it breaks bearish, our daily higher low is not set yet. Miners had a double top at the high. I'm watching the 4-hour time frame on GDX. High, low, lower high, double bottom by 8 pennies. We rejected from 31.11 today, pulled back, rejected from 31.13, pulled back, and then bounce into the end of the day. If we get further weakness into tomorrow, it'll be a very clear 31.13 double top, a 4-hour lower high, and the bulls will then have to hold 29.45 for a 4-hour higher low to form from there. Nat Gas USD, bull break on the daily, increasing bull volume. Finally, the bulls are proving something. A daily trend change. It's been a long time. The last clear little daily higher low and higher high, it's been at least 2 months. Now it's all about 2 and 203. And if those levels break, the weekly chart will be seeing the most significant shift back in favor of the bulls in a long time. When we lose the 4-hour uptrend, which is easily intact at this point, anything above 1687 is a 4-hour higher low. But when we lose it, we zoom out with plenty of space for a daily higher low to form compared to 1536. That's where we stand overall. Let's see if the market bears get any follow through. Let's see if this oil fear translates into market fear. You're going to be hearing about oil a lot in the short term this week. Don't trade oil unless you're extremely confident. If you want to rush to throw your money away, there's a lot of other places that can use it more than this market. I appreciate you watching. Hope you have a good rest of your day. I'm out of new content. We're going back to some birds from the winter. It's 3 a.m. I got work in the morning, and you Blue Jays in my front yard. Bunch of punks, supposed to be tough. What, square up. You want to go? Get out my front yard. Hey, you. What you doing? Someone, throw down. Let's go. Hey, kid, you think you're tough? It's my corn. It's my yard. Get out of here, punks. Go to bed. It's my corn. My yard. I'm a brown thrasher.